Another reason I really choose real estate over other investments is the hedge against inflation. And there's never been a more important time to be aware of the inflation that's coming our way and the need to hedge against it. So let's say that you had a $100,000 home, like we talked about. You bought a $100,000 home, and you had an $80,000 mortgage. And inflation was starting to eat away at the dollar, or continuing to eat away at the dollar. How would that affect your mortgage? Well, here's how it would. If inflation were at 4%, then inflation would eat about $3,200 worth of debt away every year just in the devaluing of the currency. So my question is, would you rather the beast, the inflation beast, eat your cash or your debt? Well, you want it to eat your debt. So that's why economists will say good debt is a good idea in an inflationary economy, because as the dollar devalues, so does your debt. Whereas cash, on the other hand, is a really bad idea in an inflationary economy, because the same thing happens. Your cash savings are being eaten away, along with your home equity and so forth. This is probably the most concerning slide that I have to show you today. And this is just a picture of what happened since 1971. Remember 1971, Nixon took us off the gold standard. No longer did our politicians have to be accountable to the amount of gold we had. They could just print money at their whim. Now this just goes to 2009 on this chart. So what has happened since then? Let's take a look. You can see here, this is our money supply. 1920, it's flatlined because we were tied to gold. You can't produce you can't just make gold. You got to go find it and dig it, and goodness knows what else they do to get the gold. But it's not something you can just make overnight. So when our currency had to be tied to it, well, the politicians had to be kept in line, flatline. 1971, you see it's already starting to go up a little, which is why Nixon said, uh-oh, we need more money and we don't have enough gold. Let's just eliminate, no one will notice, we'll just eliminate the gold standard and then we could just print money. 1971, that's what happened, and look at how our money supply increased. Now look at 2010. How scary is that? We don't even know what's coming our way because we have never been here before. Since 1920, when it was flat, and then just in a couple of years to have our money supply skyrocket like that is pretty frightening. And here's how it's going to affect us. Inflation. Just in 1 year, during the year of 2010, wheat went up 74%. I'm sure you've noticed at the grocery stores. Oats went up 68%. Canola oil up 36%, but it's not that good for you, so don't buy it. Same with pork. Went up to 60%. Don't buy it. Sugar went up 44%, and that is something some of us can't live without. So coffee up 27%, cotton up 66%. And what is the CPI? What's the CPU? What the government's telling us we're experiencing? 1%. So are we getting the truth? Usually not from certain entities. So let's take a look again at as assets inflate with inflation. They go up with inflation. Commodity prices, as we just saw, the things that we use and need, these go up with inflation. Housing is all of that. Housing is made of commodities that go up with inflation. And you've got wood, you've got cement, you've got copper and other metals and nails and tools and roofs and everything that's used to make a house or a commercial building or whatever, and labor, it goes up with inflation. So as we looked at earlier, home prices have steadily gone up in spite of all the recessions that we've had in housing. Here's a picture of the dollar deflation, the dollar devaluing, and this line, this red line is inflation. And doesn't the inflation line look a lot like the housing growth line? And that's just another way to show you that housing just keeps up with inflation. So it is a great hedge against what's coming.